BRICS Alpha here, reporting for Newshound from Pier 60 at Clearwater Beach, Florida, with your 24-hour crypto news roundup. On today's bulletin, the New York Stock Exchange set for 24/7 trading. Cardone expands real estate empire with $10 million Bitcoin buy. India proposes BRICS unified digital currency network. South Korean scam coin, gang dodge, serious jail time, and Shanghai's mixed crypto holding signals. Let's dig. The New York Stock Exchange has officially announced a paradigm shift in global finance, revealing plans for a new digital platform that allows 24/7 trading of U.S. stocks and ETFs. Moving beyond the traditional 9:30 to 4 window, the exchange plans to use blockchain technology to enable on-chain settlement of tokenized securities, allowing investors to trade at any hour. As part of the process, NYSE's parent company, ICE, is partnering with banking giants BNY and Citi to handle cross-border funding outside of standard banking hours. This move directly challenges the crypto-native advantage of 24/7 markets. If approved, this transition marks the most significant overhaul in the exchange's history, effectively merging the speed and accessibility of DeFi with the regulatory oversight of the world's largest stock exchange. Speaking of investing, and real estate mogul Grant Cardone is doubling down on his hybrid investment strategy, announcing a fresh $10 million Bitcoin acquisition for his firm, Cardone Capital. With over $5 billion in assets under management, Cardone is increasingly treating Bitcoin as a strategic treasury reserve, integrating digital assets directly into his institutional-grade real estate funds. By pairing the steady cash flow of multifamily housing with the high-growth potential of Bitcoin, Cardone aims to create a portfolio that balances traditional stability with modern upside. Across to Asia now, and the Reserve Bank of India has proposed linking the central bank digital currencies of all BRICS member nations. The plan, set to be formally presented at the 2026 BRICS Summit in India, aims to create a unified payment infrastructure that allows countries like Brazil, Russia, China, and the UAE to settle international trades and tourism payments directly, without relying on the US dollar or the SWIFT network. As a result, India hopes to insulate its economy from US trade wars while promoting its e-rupee, which has reached 7 million users. While the RBI insists the move is defensive rather than anti-American, it signals a massive shift toward a multipolar financial era where state-backed digital tokens replace the greenback as the global trade standard. And fury is mounting in South Korea in our next story, as a court hands down what victims describe as insultingly light sentences to a massive crypto fraud syndicate. The gang orchestrated a sophisticated scam coin operation, defrauding over 150 people, the equivalent of $5.4 million, with the promise of massive returns before vanishing with the funds. Despite the scale of the theft, the Incheon District Court sentenced the ringleader to just 4 years, while a secondary leader received 18 months. In addition, the court granted several members suspended sentences, meaning they will avoid prison entirely providing they don't reoffend. Lawyers for the victims slammed the ruling, noting that those defrauded are still facing financial ruin. This controversy comes as South Korea sees a record-breaking surge in suspicious crypto activity, with over 36,000 fraud reports filed in just the first 8 months of last year. Last up, despite social media rumors of a total blanket ban, the Shanghai Songjiang People's Court has clarified that personal cryptocurrency ownership remains legal in China. In a landmark ruling, Judge Sun Ji defined Bitcoin and other digital assets as virtual commodities with inherent property rights, meaning individuals are legally permitted to hold crypto in their private wallets. However, the court was clear, the Great Wall against crypto businesses remains as high as ever. Commercial entities are strictly forbidden from issuing tokens, mining, or facilitating speculative trading without state authorization. This nuanced stance shows that while Beijing is dead set on preventing digital assets from disrupting the national financial system, they are currently unwilling to strip private citizens of their digital property rights. That's it for today, dogs. Remember to share with the pack. Keep your noses to the ground and your ears pricked so you never miss a beat. Reporting for Newshound, this is BRICS Alpha. Yes, I do.